Hi everybody, Gabe Cutland with Liberty Credit Experts and CrushYourDebts.com, and here we have
Bill Curtis, CrushYourDebts.com.
awesome. So today we're going to talk about debt, and we all know that debt has an influence on people's credit scores, right? So 30% of your score, we all know, is how in debt you're in, how much of those limits you're actually using. And one of the things that a lot of credit repair companies focus on is just eliminating derogatory accounts off their client's credit profile. But maybe they don't really approach the debt in any real capacity. And what we have here is a cool and innovative way to attack that debt and influence 30% of your client's credit score, right? So a lot of you have already seen all the videos that we've been doing and kind of creating an association between what Bill does and what we do as credit repair companies, right? So Bill, kind of go over again what it is that you do.
Basically, what we do is we show people how they can eliminate all their debt, mortgages, student loans, auto loans, credit card debt, and we use a whole life policy to do it, and we fund it with what's called the PUA rider. So basically they're paying off their own debts with their own money. We find money in various ways. Either they're still funding a 401k, or a lot of times they're overpaying their credit cards. So we use that money to set up what we call a bank.
Right. So they set up a bank, they're able to access cash value fairly quickly. So the carriers that you use, they're not very restricted as to when you can access the money, right? So a lot of insurance policies out there, they really just concentrate on the death benefit. But who cares about the money once you're dead? Like, who cares about that, right? You want to be able to use that money today. So what we've been showing our clients is use your money today. Use your own money to pay off your debts, right? Stop paying somebody else to do that for you. Why would you pay somebody else to pay your debts for you when you have a perfect vehicle to do that on your own, right? And again, we as credit repair companies, we concentrate on that derogatory portion of it, right? And that's what we're fixated on is the derogatory portion. But there's this whole other outlet of debt that we can help eliminate and reduce and influence 30% of our clients' score. Get debt to income ratios down where they need to be so that the loan officer that you're working with can go ahead and issue a pre-qual letter to the realtor so the realtor can start showing properties and eventually get that client into the house. Once we get that client into the house, what did we just do? We just got our client into more debt. Now they have a mortgage. But what we can do now is use the same exact financial instrument and concept to pay off the mortgage. And how long does it take normally to pay off a mortgage using this concept?
No, it's less than 9 years.
Less than 9 years. And most likely, if you're a first-time home buyer, you're probably going to be on a 30-year mortgage, right?
And what happens is everyone is told to refinance the debt, to pay off high interest credit cards, but they don't realize they're actually paying more interest when they refinance. They're paying about 86 to 93% interest. The problem is, what happens is when we start off earning money, we're told to fund a retirement plan. So we go and we'll set up an IRA or a 401k, and that money's invested with in the stock market usually, and it's controlled by the Wall Street bankers. So now what we've done is we've taken our money and taken it out of our control and put it in the stock market. So then when we need money, we're told by the banks to use their credit cards. So they're constantly in control of our money. And that's the problem. We invest with money we should be saving. Right. And we should have our debts paid off before we start investing.
Right.
Because if you pay off a credit card that's 24%, I can guarantee you, you're not consistently making 24% in the stock market. It goes up and down.
Wow. And that's the whole idea is showing our clients how to have control over their money, how to have control over the debt, and how to use their own money to pay off the debt that they've accumulated over a period of time. The main thing here is that debt elimination is credit repair. Debt elimination influences 30% of your score. The less debt you're in, the less of a risk you are. The less of a risk you are, the higher your score is going to be.
Well, what we really do for people, or what they actually do for themselves, and what the life insurance policy does, it's just a pool of cash. And that pool of cash, they can access whenever they want for either emergencies, repairs in the home, to start a business. It's just an access that they can dump money into. It's a savings plan that they can use whenever they want, and it's there for them, as opposed to constantly reaching into their pocket and borrowing money and then having to pay interest to somebody else.
Right.
And that's what we're trying to eliminate, to show them how to control the flow of money back to themselves.
Absolutely. Not only have we helped clients eliminate debt, now we have a brand new way to generate revenue for a credit repair company. So again, we turn away people in the past who had no drawings whatsoever and only high utilization, maxed out credit cards. And there wasn't really much that we could do. Now we have a perfect outlet to show clients what they can do with their own money and get themselves out of debt. So remember, debt elimination is a type of credit repair. And what are we doing? We're repairing people's credit. So if we can get them out of debt and influence that 30%, then we're doing our job as a credit repair company. I'm Gabe Cutland with Liberty Credit Experts.
I'm Bill Curtis, crushyourdebts.com.
Thanks so much, and we'll talk to you guys soon.
Bye now.